Our guest today oversees fuel supply, pricing, and risk management. And at a time when Middle East tensions, rising freight costs, and the prospect of sustained oil price hikes are putting intense pressure on Philippine energy security and inflation. With us now for more is Ariel Tiongco, president of Filoil Group. It's good having you here, Ariel. Welcome to the program.
Good morning.
Good morning. So how's the market price looking so far on day 5 of the escalations?
Yes, we've seen the market to be very volatile for the past 2 days. We were looking at MOPS as our reference for pricing, and we've seen it climb consecutively the past 2 days, both for gas oil and mogas. So we've seen an increase of roughly $25 per barrel for the past 2 days for gas oil and around $15 per barrel for mogas.
Okay, so how does that translate then to what you see as a projected 30% increase? This is what you said in your press statement about 48, 72 hours ago. Where are we in that range of 30% of an increase?
So we're actually within the range of the 20 to 30% that we've seen. But of course, as we all know, there's always this knee-jerk reaction. So we'll wait and see throughout the week on how the movements continue, and then we'll see towards the end of the week how it will unfold.
So it's likely that we would punch up beyond 30% of an increase?
I hope not, but as you've mentioned earlier as well, we don't know how long this will last, and the longer that it takes for this to settle, I think the bigger the impact will be on everyone, particularly for us here in the Philippines.
And you've been having meetings with the Department of Energy, and that came through first thing Monday, and that you have discussed the possibility of staggering the price hikes.
Yes.
If and when they happen from next week.
Yes.
What is the update on that discussion?
Well, there's going to be a meeting on that one today, actually. Because, of course, everyone wants to caution the impact on the consuming public. And, of course, all of us stakeholders need to adjust with the current situation that we're in. Just like what was mentioned earlier as well. The government will pitch in, the oil companies as an industry should also help. And, of course, the consumer, are reducing on the consumption and conservation with this critical situation that we're in.
Well, what would be maybe say comfortable recommendation for an oil trading company, for Filoil? What would you put on the table in terms of executing a staggered price increase?
Well, actually, the structures that we have in place will allow us to be able to mitigate some of the impact. But of course, we have to look at the cost structure in itself. The key component there has, of course, the increase of the product. But we have to be cost effective. Of course, the prices in the end will also be relative to our competitors in the market, right? So we have to be cost effective in bringing in the product, making sure that we are efficient. And then in terms of pricing, of course, we do hedging and all of those formulas that are available for us with our various trade suppliers within the region as well. So it gives us the flexibility. But what's most important, I think, is for us to be able to bring in the physical product, and then the remedies, we could see how we can move forward with that.
What do you think is the possible range of a price increase would be working on by the end of this week?
It's hard to really tell for now, but because we only have 2 days. But we'll see how we can reflect it on a staggered basis by next week. I don't want to really speculate on the number because, as I've said, it's quite volatile. But of course, we know what's triggering this. In the end, what we're more concerned of is the finished product rather than the crude, because most of the industry players in the Philippines are generally bringing in finished product. There's only one who's refining products and bringing in crude. That's why our reference has always been Minoplatz as our index in terms of the prices. Of course, it has a strong correlation with the movement of Brent oil.
Right, and in terms of Filoil Group, if you do indeed agree to staggered price increases, what can we expect? Is it over a couple of weeks? Maybe give us an idea what the scenario will look like.
It will depend on the discussion today and, of course, the level of increase that will be implemented by next week, meaning at the end of this week, we will see an average price, which is a spread from what we have the previous week, last week, and then we'll see how it will pan out in terms of the implementation, because to the degree of the amount, it has to be as well agreed amongst the stakeholders.
And given your cost structure, specifically for Filoil, is it really 100% of a pass-on cost, or are you taking some?
Well, just like what I've said earlier, we have to be cost effective in our cost structure. So we have to find ways where we can reduce, of course, the cost as much as possible, so that we can help as well and do our share in cushioning the impact to the stakeholders and the consuming public as well.
So what other options do you have? I mean, are you actively hedging? Or
Yes,
are you already considering other alternate suppliers?
We are hedging, and we work closely with our suppliers within the region as well for their inputs as well and how they see things. So that gives us also a better perspective on how to move forward as well, together with them as our partners.
When the president says, try to conserve energy, is that going to help at all?
Of course. To lessen the spending on purchasing or acquiring energy resource, if we consume less, then we would need less, and then of course it lessens the strain on our financial institutions as well, purchasing products which are cost higher.
But in terms of inventory, I know that you said you have sufficient inventory,
Yes.
but what are the metrics like? I mean, how many months or maybe days can you commit for sufficient cover?
Well, actually, we have sufficient cover because we have sufficient logistics facilities nationwide. We have import terminals and secondary terminals which are well stocked, well replenished, and of course, we always program to cover our monthly requirements well ahead of time. So it's always like N+1, N+2. No? We nominate already to our suppliers the definitive dates of arrivals of our imports, making sure that we don't run out of products, and these are all in place already. So we're quite confident with that one.
What about for the suspension of the excise tax on fuel? What is that going to do for the industry?
Well, the suspension would actually help because at the end of the day, for diesel, the excise tax is around 10 pesos per liter, and for gasoline, it's sorry, it's the other way around. I stand corrected. For diesel, it's 6 pesos, and for gasoline, it's 10 pesos per liter. So that's the immediate impact if this will be suspended.
All right, just one more question. In terms of stakeholders, you're not just the only industry that's going to be impacted, but a lot of others.
Yes.
And industries, businesses, the business sector is already saying it's an inflationary shock. If there's one policy measure that you would recommend that the government do at this point, what would it be from the perspective of the fuel oil business?
Well, actually, that's a good move if we reduce the excise taxes. And then again, to really look into the cost components which are bringing the prices up, where areas where we can adjust and we can be flexible. Probably that's the area where we can look at to tweak it so that we adjust immediately with the current situation.
All right, well, good luck on that meeting later on. And keep us up to speed on what happens next.
Thank you very much for having us.
Thank you so much
Thank you
for joining us. Ariel Tiongco of Filoil Group.